Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, July 8th, 2014. We had a down day across the board with weakness in the ES and the NQs. There's a lot of weakness, especially in the small caps for sure. So we've got to keep an eye on those and see if that materializes into a little bit more. We're expecting some weakness today, and actually, I'm really expecting a down week after the setup that we were left with from the Friday. I think one of the other important things to take a look at is the market internally. The market internally was extremely weak today. We were minus 1,200 issues on New York and minus 1,700 on Nasdaq. That's an absolute crushing on Nasdaq. And I think if you scour the entire Russell index for up issues, you probably exhaust the rest of the night trying to find one. So it was a internally very weak market, which is something that the bears can build upon, and something that definitely needs to be taken into account here. But let's move on and take a look at the major futures and see what they have to tell us after today's session. First up, here's a look at the ES futures. You can see that we've got a 13 exhaustion in place. The risk level still in play. Definitely had a down day today. We actually nudged down below the 2-day range. But this little breakaway gap is still open, so we've got to fill that and settle below that to close that. For now, the reality is that we're still short-term positive. We're above the 10 EMA. And we've got a lot of distance above the 50. And not only that, look at the distance all the way down to the 200. So by all classical technical analysis measurements, the market is very healthy, but at the same time very extended and very long in the tooth here. So this definitely could be an area where we could roll down, see the 6 ace level, see the 50 DMA, and perhaps even the 4 ace level here, which is the current active static trend line, which is even more important. On the NQ side, a little bit more weakness in the NQ than the overall market, especially internally. We're not going to see so much in price. We had a day where we were pretty much boxed up here, where we had some I guess the action I would characterize as more of a bid vacuum than anything else. Players just unwilling to step up here. I think one of the chief reasons that the Nasdaq chart looks this way is because of the relative strength today in Apple. There's a little relative strength in Microsoft. So these heavyweights really kept the averages from really I think showing their true colors. So be prepared for that later on this week. At the same time, the big guns were not rolling over, so you could also make a case for, well, they just stepped away from buying the high flyers and buying the secondary and tertiary names in the index. So doesn't really mean much, and that's true. But what we really need to do is resolve this range one way or another. Probabilities suggest that it's going to be to the downside because we've got this 13 exhaustion in place. And the other thing is we talked about is the very high ADX reading of plus 70. So this is a very well set up market to just have some kind of a retracement to the downside that we can start to maybe dig our teeth into a little bit, depending on how it unfolds. Here's a look at the Russell index. We don't spend a lot of time talking about this, but today the Russell was a basket case. We have this area here set back in March. That was the one high, and we retested that just last week. But you can see that retest didn't go very well, and it was rejected by the sellers, and we've dropped right back down into the 8 ace level at 1187.50. That's going to be a really key area. If we break 1187.50 on the downside, we're going to revert to short. We're going to go to short-term negative for the first time since the second quarter. And that's really going to be a pretty big deal. So keep an eye on that. If that starts to go, a lot of times the small caps lead, NASDAQ follows, and ultimately the broad market succumbs. Very classic and typical scenario. So let's be prepared for that and make sure that we have some shorts ready to go, just like we did today. As far as the other asset classes, the TLT was higher on the day. Was the alternative asset class to the weakness in the overall market today. Got a little bit of a bump, but didn't take out the 10 EMA. So for now, it's still short-term negative. If we do take the 10 EMA and the 50 and this 4 ace level above 112.50 to the upside, that's really going to get my attention. Oil futures were fairly weak today, which you would expect in a sloppy tape. We're at 8 bars down now in the seeker startup phase, and we're finding that some support here at the 50 and the 6/8 level. So the 50 period moving average in conjunction with the 6/8 level is going to be really important. Moving on to the gold futures, gold did absolutely nothing today. I wouldn't expect that gold would really make a move until we get a little bit deeper into a move potentially with the equity markets. So keep gold on the margin for now, and if it does start to move, we definitely want to be playing this. We're above the 50 and above the 200 period moving average, so if we can get some upward movement, we can start talking about the static trend line up here at about 1368 or so. At the same time, if the market does kind of shake off this little bit of weakness, we could easily drop back down into the 50 and the 200 period moving averages. I want to take a look at the market internals right now. Here are the cumulative advanced decline lines. Here's a look at the S&P side. This is the New York Stock Exchange cumulative advance decline. Starting to show a little bit of topping off, a little bit of rolling over, which is never good. But really need to get some more clarity and really start to break this uptrend that we've been in. NASDAQ today was much weaker internally, being minus 1,700 issues. Turning down here, potentially forming a lower high here, but that still needs to be proven. We've got to go much lower before we have a qualified lower high. But definitely some acute weakness in the NASDAQ internally. Just keep in mind, one day does not make a trend, so we'll have to see if we follow through either tomorrow or Wednesday. Tomorrow, I'm kind of thinking we're going to have perhaps a little bit of a measuring day, but you never know. Wednesday is going to be the bigger data day. There's no meaningful data tomorrow. The next real meaningful data are going to be the FOMC minutes from the last meeting that will be released on Wednesday of this week. So I think Wednesday definitely has the potential to be pretty exciting. So we'll have to see what they have in store for us. Here's a look at the multi-sector daily chart. You can see that there was really nowhere to hide today. Everything was down. The XAU was lower. The OSX was weak. Transports were especially weak. And also the BKX was green. So even with the XAU being a defensive kind of sector, just nowhere to hide today except for fixed income. So definitely seeing some weakness here. Need to pay attention to this if this persists, especially with the oil service and the transports. We need to be aware of that and start to play the downside setups more aggressively. All right, here's a look at the sector chart. This is the watch list. We rank the performance from best to worst. The utilities, which is often defensive minded, was the top gun, so that's really not what you want to see at the top of the list. Consumer staples were pretty high. The commodity-related equity was high, and the cyclicals were actually fairly decent. BKX was not so bad, all things considered, but we saw some pretty good weakness in the XOI, even more in the higher leveraged OSX was down 1.3%. The BTK was really weak, and the big loser today by a long shot was the XAL. Airlines were really weak today. That was something that we kind of sniffed out over the weekend, and pre-market we put in some short suggestions for Delta Airlines under 3803 and also for American Airlines under 4140, and both of those were down in the order of about 4% today. So nice winners there. Sniff that out. Expect some further weakness in those. Those charts are actually starting to break down. We lost some key technical levels in some of those individual names today. All right, let's take a look at a couple of the key sectors. Here's the Dow Transports getting repelled here by the plus 1/8 level. We essentially have an engulfing candle to the downside. Settled at the 10 EMA. If we lose that, we're going to put this 8/8 level in play, and then probably ultimately some lower levels here as well. The XAL, the airline index, just got absolutely hosed today, settling down at where you would expect at support at the 50 DMA. If we lose the 50 DMA, that's going to put this into intermediate term negative and put this 4/8 level into play to the downside. Note that the MACD is sloping to the downside and is actually starting to pick up some momentum to the downside. The BTKs were also fairly weak on the day. Pretty good candle to the downside, settle below the 4/8 level and right at the 10 EMA. If we lose the 10 EMA, that's going to be the first loss of the 10 EMA here, legitimately since late May, which would definitely be a game changer there. Banking index, the BKX, is also fairly weak. We recorded a 13 exhaustion candle on Thursday, which also lines up with the broad market. Today's candle was essentially inside. We really didn't lose this 8-ace level, but if we do lose this 8-ace level, the 6-ace level should come into play fairly quickly there. As far as the top indexes go, utilities was strong on the day, but you can see it's already starting to leak to the downside and break. Semiconductors were relatively strong versus NASDAQ, but definitely did have a hiccup to the downside. This chart actually looks a little bit more constructive than some of the others because we don't have a bar count or any Murray math levels in the way. But if NASDAQ does roll to the downside, this one will surely yield as well. Last up, let's talk about the oil services, the OSX. Settled just below the 10 EMA after getting repelled here by this 8-ace level. So you can see that if we have a follow-through day to the downside, we're going to be short-term negative for the first time since mid-May. That would definitely be a big game changer and potentially put this 6-ace level in the 50-period moving average in play. So keep an eye out for that. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.